Hello, this is Reid. I'm president of Real Assets with Westwood, and this is our monthly update for September. It was a basically in-line, kind of flattish month for the midstream indices, up about 60 basis points for the Alerian Midstream Index, down about 30 basis points for the MLP Index. But what's really notable is that the commodity ETFs were down 3 to 5%. XLE was down 3. XOP was down 5, and crude oil was down 7.3%. So what's really quite important, I think, here is that the midstream equity indices were up modestly while the commodities were down, and we're going to talk about that later. But we're at that rare moment where the correlations actually turn negative relative to commodity prices. Now, since September has ended, we've actually seen a pretty sizable rebound. Oil is up 8.7% on the back of some fighting over in the Middle East, and we'll talk about that as well. But all in all, it was a kind of an inline month, and year to date, the numbers are still very impressive, up 27 to 28% for the midstream indices, whereas the ETFs are up 7% for XLE and actually down about 2% for XOP, which is the upstream producer index. Through September, crude oil was down 5%, whereas natural gas was up 16%. Now that we moved into October, crude oil is actually up about 3% for the year, and nat gas remains up. In terms of some of the breakdown within the sectors, we typically break it down by C Corp. In the U.S., the average C Corp was up 0.5%. MLP average was up, 0.4%. The surprising showing was from the Canadian C Corps. They were up 2.5%, led by Key and TRP, which were up 5.8 and 4.6% each. So those stocks, as many of you know, have underperformed year to date. They had a catch-up trade really in September and for the last 4 or 5 months, primarily, we think, due to falling interest rates, which tend to benefit the large cap Canadian companies that have more debt. There was also a spinoff executed by TRP that helped provide a catalyst to unlock some of the value there. On a year-to-date basis, the numbers are quite strong, and the C Corp average in the U.S. 30% year-to-date move, led by Targa up 73%, DTM was up 48%, and Kinetic was up 43%. And on the laggard side, Cheniere Energy was up about 6%. So really positive across the board for all the U.S. C Corps. The MLPs are actually lagging year to date. The average one is up 14%. The top performer is Western Midstream up 40% and MPLX up 29%. But a couple of the non-midstream like Sun and CAPL were down 6 and 2%. So MLPs are certainly lagging behind. We think that's largely a function of C Corps are benefiting from index-driven flows and the kind of the hot new theme, which is AI data center growth, which benefits the natural gas companies. MLPs, because they issue K1s, aren't as popular, and therefore they're lagging behind. And there's now a pretty good valuation disparity between MLPs, which are undervalued relative to C Corps. On the Canadian side, the average stock is up 26%, led by Key up 37% and TRP up 31%. And on the laggard side, they're still doing pretty well, up 16 to 24%. So all across the Canadian average, all the stocks are up. And then talking about correlation. So we show here on this correlation page that for the most part, correlations, the bottom graph shows that correlations are typically positive between 0 and about 80% correlation, averaging around 50 over time. Now we're in one of those rare periods where the correlation is actually negative. Midstream stocks are up while oil is down. And that happened at year end as oil prices fell. And it happened again here in the last 2 or 3 months. We think that's really a function of investors believing that these midstream stocks are benefiting from volume growth. They're not really that sensitive to oil as long as oil remains in attractive levels in the mid 60s to the mid 80s. And so people really aren't overreacting to a commodity price decline. So that's certainly good news, I think, for investors that it's not overly sensitive to commodity prices. The other thing that's probably driving it is the balance sheets are in such great shape that they really don't need to issue equity. and debt is at pretty low levels. And so the financial risk of the industry is actually quite low now with low levels of debt. And really the biggest risk out there that's now front and center, I think, is the potential impact of a Middle East war. You can see here that this Strait of Hormuz in the middle there does transport about 17% of global oil supply. So one of our concerns is that something does happen between Israel and Iran. Potentially, exports of 1.5 million barrels could come off the market from Iran if they were sanctioned or some damage was done. OPEC has been able to manage supply pretty effectively in recent years, but they are vulnerable to some kind of political event in that region. Hopefully that will not take place, but that's certainly one of the risks that we see. The market is responding now with the missiles firing here recently, the last couple of days, to elevated commodity prices. I mentioned earlier that crude oil is up about 8.8% this month. So I would say a lot of it's kind of baked in, but you never know if something does go wrong over there. It could lead to a short-term spike. We've held the belief that a spike in oil is not good for the world, not good for oil, and likely come right back down. But that is something to be mindful of as we move throughout the month here. So thank you all for paying attention. I appreciate it. Hope you have a great October and look forward to talking to you next month. Thanks.